Yes, people, let's start. Yes, good morning. See, people, I'd asked you to calculate ratios for question number 9, right? Correct now? You're supposed to calculate ratios for question number 9. I hope you have calculated that. You people are done with the ratio calculation for question number 9. Yeah? Okay. We'll do one thing. We'll quickly check your answers. See, remember when you have to write comments now, you don't have to write essays. Okay. You, what happened? Ukal? Ukal doing this. What happened? All okay now? So when you have to write comments, now, see, you don't have to write essays. In one line about each ratio you have to complete. That's it. Am I clear? Okay. Yeah. So let me just come to the question. Okay. So post me the answers of GP ratio. Come on, let me see what you'll have done. Only the numbers. I don't want writing. Let's write the numbers. 21.33 and 20.32. Correct, people? Right. So what we can say, GP ratio is reduced, no? Hello? Correct? Marginally reduced. Okay. See, why the GP ratio reduces, you tell me. GP ratio reduces. Why? Either sales reduces or the cost increases. Right? Right for it. Right. Yeah, increase in direct expenses. Correct. Yeah, please write. GP, you're writing the comments, correct? Okay, right. For issue number 1, GP ratio, gross profit ratio has reduced I repeat, gross profit ratio has reduced. Give me a moment. Give me a moment, means I'm not going anywhere. I'm writing the comments. Best thing. You know what happens later? Sir, I lost my network, sir. I did not hear, sir. Please repeat, sir. This is the best option. Okay. So, question number 9. Comments. Hey, people. Audible, visible, screen is visible, everything happening normal. Good. Thank you. Thank you, friends. So let's write number 1. GP ratio has reduced due to increase in, what we should say, increase in cost of goods sold. Let's write number 2. Here people, post me the operating expense to sales ratio. I'm seeing your comments. 16.3 and 15.24. 16.34 and 15.24. So right. Operating expense ratio has reduced from 16.33% to 15.24%. Okay. Let's write the third one. Operating profit ratio. Give me the answers for operating profit ratio. 5 and 5.08. Right, people? Those who are getting 6.3 have taken wrong operating profit then. 5 and 5.08. So, right. Operating profit ratio has increased from 5% to 5.08%. Correct, people? Yes. Now, why this operating profit has increased? It has increased. No, it has increased marginally only. Though marginally, it has increased. Why is it so? It is because of a slight reduction in what? Operating expenses. As you can see, operating expenses have slightly reduced. Yes. So mention that due to decrease in what? Operating expenses. Fourth one, capital employed turnover ratio. Okay, 3 and 2.54 times. Correct, people? Mahesh, you got a little different answer there. Hello, Mahesh, you're getting different answer. 3 and 2.54, right, guys? How do we calculate? Tell me. Sales upon capital employed. What is your sales? But your sales is 3 lakh, 3,74,000. Divided by what is the total capital employed? Did you take only sources of funds or what? Total capital employed is how much? 1,47,000. 2.54, Ray, not 2.36. Mahesh corrected. Yes, 3 and 2.54 times. Okay, so let's write capital employed turnover ratio. Okay, no problem. I got it much. Capital employed turnover ratio has reduced from 3 times to 2.54 times, which indicates what? Inefficiency, inefficiency in utilization of capital employed for generating sales. Understood, people, what I said? Did you understand this note? Okay, what is this simple ratio? Sales upon capital employed. It's how efficiently you use your capital employed. So in the first year, you are generating sales which is equal to 3 times of the capital employed, right, friends? And in the next year, it has gone down to 2.5. Means what? Means that there is an inefficiency in utilization of capital employed. Able to understand this, guys? Right? Okay. Okay. Let's come to next now. Fifth one. What it says, stock turnover ratio. Okay. So how you to calculate COGS upon what? Average stock. And yes, we were able to do average stock this time. So the answer is what? 4.72 times and 3.87 times. Yes. So what we would say, stock turnover ratio has reduced from 4.72 times to 3.87 times. Okay, now we have to write now what it means. Remember, guys, what is stock turnover ratio? COGS upon average stock, right? Could we calculate average stock this time? Answer is yes. Why? Because the first year's opening stock is also separately given in the question. right? Fine. What it shows? It shows how quickly the goods are bought and how quickly they are sold. Correct, friends? Okay. What we can conclude from this result, we can say that the turnover has reduced slightly, correct? And that what is efficient, even I think in the values of the stock that is getting maintained, no? First year opening stock is how much given in the question? 40,000, no? 40,000. Yeah. First year opening stock is 40,000. Correct, friends? First year closing stock is 60,000. Second year closing stock is 94,000. What do you see? So, and stock is lying more, no? So what has happened? That the frequency of sale has gone down. Frequency of sale has little, but it has gone down. The speed of sale, goods come quickly. Oh, you remember how I explained you how quickly goods are bought, how quickly goods are sold. So that frequency of sale, that speed of sale has gone down a slight. Am I clear to this? Okay. So let's write about this. Let's means we have written the ratio. Okay, but then write that thing also. Okay, fine. This is how it happens. It shows how quickly goods are bought and sold. The reduction in the ratio shows the speed of buying and selling has reduced, and the stocks, and I mean to say what in bracket I'll write unsold goods as stocks have increased. Okay, you can write like this: year one opening stock 40, right? Year one closing stock 60, right? That's what you're trying to prove, no? That there's a gradual unsold goods lying in the godown are increasing. Year two closing stock is 94. So gradually it is increasing, right? So it's not good. Okay. What was the next ratio? Net profit to people. You have understood the comment. And in comment we are mentioning the ratio also. So those who are joining a little late, those who are searching for answers, where is answer, where is answer, where is answer? The answer is there itself. Yeah. Yes, people have already replied. 15% and 14.53%. Right? 15% and what? 14.53%. People, is this answer correct? 15% and 14.53%. Yeah. Now see, if you do excessive rounding off, 15% will remain 15%. And then you say 14.53. Let me round it off to 15. Then it's a funny thing to happen. Don't do this extreme rounding off. Now, why am I saying this? Because I've already got that answer in the chat box. 15%, 15%. 15% is 15%. And 14.53 is also 15%, sir. See now, after decimal there is a 5. You remember what I told you in the first lecture when you started calculating ratios. 2 digits after decimal you start rounding. So 14.53 you keep as 14.53 only. Don't round it off to 15. Clear? Karina, check your answer, dear. Please check your answer. So, net profit to net worth. In simple words, it is return on proprietors' funds. So, write like that. Net profit to net worth. Return on proprietors' funds. Correct, people? Return on what? Proprietors' funds. Has reduced from 15% to 14.53%. Thus, there is decrease in profitability. Correct? This is basically profitability in relation to investment, right? No? Return on net worth or net profit to net worth or return on proprietor funds. Come on, tell me. Receivable collection period, average collection period. Ha, ha, ha. Everybody has calculated according to their own convenience. Months you guys have done, or some people are replying me in days, some people are replying me in months. Okay. See. Wait. We've been asked to calculate average collection period. Definitely you're not in a position to do average data. So how you would calculate? Okay, I'll show you. Wait a minute. First you'll calculate DTR. Okay. So suppose it comes to year 2019. So how would you say? You would say credit sales upon average debtors plus what? Average bill receivable. Then you say, sir, average bill receivable is not possible. Listen to me carefully. Shh, listen. Sir, 2019's opening debtors are not available. Correct? 2019's opening debtors are not available. Only closing debtors are available. Sir. Receivable is nothing but debtors. So, sir, I will be forced to do closing debtors for 2019. So, okay, fine. So, what's your sale for 2019? Credit sale, guys, credit sale. Don't take the final amount of 3 lakh. Only take the credit sale of 2,70,000, right? And the closing debtors are how much? 50,000. So 270 divided by 50 gives you 5.4 times, right? Therefore, ACP, now your choice. I'm doing 12 by DTR. So I'm getting it 12 by 5.4. 12 divided by 5.4. Answer is 2.22 months. Okay. Wait, don't rush. Now, when we talk about 2020, now I would write credit sales upon average debtors plus average bill receivable. Bill receivable are not there. Sir, now can I do average because I know opening of 2000 opening because the closing of 2019, no sir, That 50,000 is the opening of 2020 and closing of 2020 also, I know, sir, given in the question, 82,000. Right, you know a lot of things, but understand, people, for comparison, there has to be some common basis. Do you agree with this, guys, what I'm talking to you people? Hello, do you agree with what I'm saying? In 2019, you were forced to do closing debtors. Why? Opening is not available. 2019 opening is not available. We will follow the same thing then to make the comparability. We have to follow the same basis. Are you getting me, guys? Okay. So we are not going to do average in 2020. We will do closing only. Okay. Why closing? To maintain comparability. We take what? Closing debtors in 2020. Yes, ensure comparability. Good morning, Shrija. So 2020 credit sale is how much? 342 upon closing debtors are 82. Right? So 342 divided by 82. It came to 4.17. Therefore, average collection 12 by DTR 12 by 4.17. 12 by 4.17. 2.88, I can say, na 2.88 months, 2.877, no, so 2.88 months, right, friends? Yes. Mahesh Modi, you use some scale on the book. You're reading wrong values. Mahesh, credit sales is not 298. 298 is cost of goods sold. Arey, people. Good morning, people. Still somebody's asked me, sir, average debtors is this much, sir, right, sir? Arey, supply some, arey, I'm not taking the bottle of water. So supply some water. So people should die, jump in and go die in that water. Okay, okay, no problem. Arey, here on the screen, I'm writing the reason that you should not take average debtors. And people are messaging me, sir, average debtor this much, sir. What? Hmm. Okay, so right. The average collection period has reduced from 2.22, has not reduced, sorry, has increased. Has increased from 2.22 months to 2.88 months. It indicates what? Inefficiency, no? If you take more time to collect the money, so what it indicates inefficiency on the part of whom? On the part of recovery department. Yeah, but see, that's not all, huh? That's not all. See, you can always write, it may also be a result of changes in receivables management policy of company for increasing sales. Hello, people. Remember receivable management topic. Company always thinks that increasing credit period increases sales. So management might have also offered higher credit period. Na? Why always blame recovery? Someshwar, why you're taking COVID name early morning? He's saying because of COVID. Arey yaar. Then some some secret service agents have joined my chat box. That's it. This is only called as commenting. What else you want to write? Chalo, let's go to the next question. Very good, Kamal. I read your message. Understand what a long story you have written. This is how you're going to remember balance sheet ratios. Super. Excellent idea. copying your message and sending to everyone. He has created a story. Kamal has created a story around the balance sheet ratios. Everyone now I've sent it to everyone, so I cannot take Kamal's credit. I'm telling you, people, Kamal has sent this message to me. Wonderful idea, no? Remembering all balance sheet ratios by weaving a story around it. Good job. I hope everybody got the message. Okay. This is not my idea. This is Kamal's idea. I cannot take his credit. Good idea. Good idea. Yeah. Wait a minute. Yeah. Everyone publicly. So please appreciate in public. Yeah. Okay. So everybody was appreciating. So I thought. Great, great. This creativity has to come out somewhere, right? Okay, fine. So back to normal mode. Appreciation has reached to the person who deserved it. So back to normal mode. Yeah, people, come. Let's go ahead. So we'll go into the next question. Let's come. Achha, we'll do one thing. We'll add a few more ratios. Then we'll go to the next question. You remember yesterday we were done till dividend yield ratio, right, friends? Okay. Let's add a few more to this. Yep. Yes, please. Right. Interest coverage ratio. Very simple, yet very efficient ratio. See, the formula is EBIT upon interest dash times. Okay. See what will happen now. You will try to find a meaning from this, and you will feel, sir, very difficult. Sir. I have no, not able to predict from the name. But it's not like that. Once you should know the meaning, then you will be able to predict from the name. What it shows. See, first of all, we all need to understand that interest is not voluntary payment. It's a compulsory payment, right? So interest is fixed payment. Everybody will agree on that. That's why once we borrow, we have to pay what? We have to pay interest. Okay. So interest is what? It's a fixed payment. It is paid out of EBIT. Correct, friends? It is paid out of what? EBIT. Everybody agrees that? Hello, peoples. Interest is paid out of. You remember the income statement format, no? After EBIT, what we subtract? We subtract interest. Yes, we subtract interest. Okay. Okay. So it is paid out of what? EBIT. Now you will get the link. Okay. Interest coverage. Right? The ratio shows how well the interest expenditure is covered. Okay. I would simply say higher coverage is better. For example, let's create two companies. EBIT, say both have EBIT of 2 lakh. Correct. Let's talk about their interest payments. He has a interest obligation of 20,000 and he has an interest obligation of 1 lakh. People, can you see where the risk is? Okay, I'll write as usual, like this is number 1, this is number 2. Where do you perceive more risk? In 1 or in 2? In 2? Where is the risk? 1 or 2? It's in 2. It's in case of B Limited. No, the risk is quite high. Rama, understood? You're saying 1 initially. See, both are earning 2 lakh. But who would be tensed? It is that B who would be tensed. Correct, na people? Why B would be so tensed? See, income is 2 lakh, but the interest is 1 lakh. Someshwar, anytime because of COVID, the income goes down. Someshwar is always like, sir, because of COVID, because of COVID. So, if really because of COVID, the income goes down, will the interest payment change? No. Then you will be in tension to repay that money. Correct? So, what is better, guys? Lower coverage is better or a higher coverage is better? Higher coverage is better, no? Right now. See, here interest coverage would be 10 times. It's like I have to pay 20,000 and I have 2 lakh rupees in my pocket. 10 times more. And here interest coverage is only what? 2 times. So I have only 2 times the money that I have to pay. Right? See, friends, this awkward situation we all have faced in our life at some or the other point of time. Right? We go to class, we go to school, we go somewhere alone, we are returning back, and we have very limited money in our pockets. Okay, sometimes it happens. We face some emergency expenses, we have to incur some expenses, we are left with very less money. Then you know what happens? Suppose, for example, a person is left with 40 rupees in his pocket while coming back. Okay. And he's coming back by auto or cab, whatever. Okay. Auto is the best example because it has a metered payment. It's coming by auto. So okay, reaching home is around 45 rupees. You know, na, from our place, we all normally know. Then what do? You keep looking at the meter. Okay. You don't want to get into that unnecessary arguments with the auto driver, right? So you keep looking at the meter. The moment it touches 39 rupees, wait. You get down and start walking. Give it this money. Why? Coverage is less now. So you know the bill is going to be 45 rupees. You have 1,000 rupees in the wallet. Then you don't even look at the meter. Keep driving. Easy chatting, talking to friends, clicking selfie in the auto. But the day you have limited money, you get worried. So that is what is the coverage, right? For making payment of your fixed expenses, higher the coverage, you get more relaxed. Right? People getting me? What am I saying? Yeah. Okay. So see, that's why the coverage is important. See, many young professionals, what do? No commitment. So whenever they start making salary, they do big commitments. I'm talking about financial commitments. Means they buy they buy car, they buy people commitment. They buy car, they buy house, everything on loan. So 70-80% of the salary goes away in the what installments, and they're not affected. Why? Because the parents are earning, so we are not taking care of the house as such. Parents are earning, our income is there just like that addition. But when the problem comes, when there is some deviation in the income because of the company policies, because of the competition, because of COVID, Someshwar, right? For all these reasons, suppose there is a change in your income, then what happens? Then you suffer a lot. Okay? So what our parents or grandparents generally say, stay conservative. Start making 1 lakh rupees a month, good. Save 60,000 first. Put that in the provident fund account. Put that in the RD. Then from remaining you meet your expenses. Right? We are like what 1 lakh rupees and 80,000 I've spent sir, first. I'll increase my standard of living. So that comes back to you when you are suffering any loss of income. So basically what this shows you how well you should cover your fixed expenses. Okay. Thus, he is more safe due to what? Higher coverage. Okay. Interest coverage, no? You also write one name over here, also known as debt service ratio. Interest coverage ratio is also known as what? Debt service ratio. Okay. Now, since we do interest coverage, no, guys, interest is a fixed payment, no? So, like that, even preference dividend is also a fixed payment. No? So, what we will have to do? Preference dividend coverage ratio. Now, see, when it was interest coverage ratio, it was EBIT upon interest because the preference interest is paid out of EBIT. Now, I want you to get the ratio. Look at this ratio and guess the ratio. You pay preference dividend out of which profit? Saket, your answer is wrong, beta. We don't pay it out of Payesh. EBT, who's that? EBT for and government is looking at your face only. Huh? From EBT, you direct pay preference dividend. And government is like, okay, okay, no tax, no, okay, okay. What people? You pay preference dividend out of which profits rate? NPAT, na? Correct, na? How can you write EBT? It's such a disregard for government. People don't want to pay taxes. No? That's a basic thing in the mind. Who will pay taxes, sir? NPAT, Sabas. Okay. So formula derived. Formula derived on our own. What will be that? NPAT upon what? Upon preference dividend dash times. Again, same na guys. Preference dividend also fixed payment na. Moment anything comes to tax now, people don't leave an opportunity to guess my income. You are in 30% tax lab, but no, I'm under section 10, right? Agricultural income. Uh, Horticulture, right? All that things, yeah. Dairy farming, early morning. Hey, chalo, everyone, had. Same thing over here. Higher the better. Correct, now people. Knowing my earnings will motivate you people. Then you should try to know the earnings of Zuckerberg or Mukesh Ambani. I'm such a small man. Mukesh Ambani's earning you find. You find Elon Musk earnings, right? You ask, you ask, I must say it true. Kumar Mangalam Birla, find earnings of these people. I've already underlined the important message. Higher the better. It is not only Rakesh Jhunjhunwala. True. Huh. Okay, people, let's go ahead. One more, one more. Yeah. Now see the name of the ratio. Very, very tricky, huh? Debt service coverage ratio. Guys, pay attention to this word. Huh? Earlier, I had taught you debt service ratio. I told you that this name is debt service ratio. And this is not debt service, this is debt service coverage ratio. Okay. So, yes, definitely it goes somewhere close to debt servicing only, but this is not debt service ratio. This is debt service coverage ratio. Okay. So, I would put it like this: cash available to repay. To repay what? Hmm, principal plus interest. Installment, okay, upon the annual installment of loan, obviously. People, see, this also should be higher the better, right? Cash available to repay both principal plus interest means only what? Means only installment of the loan, right? Divided by the annual installment. Earlier we were just talking about what? Earlier we were just talking about interest. In the earlier ratio, debt service ratio, we were just talking about what? We were just talking about interest payment. But here, see, friends, we need to understand that we don't just have to pay the interest, we have to pay the principal amount also. No? The principal plus interest taken together is known as what? Annual installment, right? Again, this is a fixed payment. Every one of us know that annual installment is a committed amount that we have to pay, means we have to pay, right? So now cash available for payment of annual installment divided by annual installment. Okay. Only thing is that first we need to understand that there is some difference between the net profit and the cash available. Hello? Some of you people have done cash flow also, have done indirect method also, right? So in net profit, we add back depreciation, we add back loss on sale. Do you guys remember that? Okay, in case you're done, if you're not done, just don't pop out of my screen. Not done, not done, not done. Done. Okay, whenever it will be done, yeah, non-cash item. Correct, correct. Correct, Akshay. You're right. So now the question arises how we should calculate this cash available to repay all this. So see, that is how we will do it in your NPAT. Okay, net profit after tax. What would you do? Add back depreciation. Hello, where are the people? What say, guys? In NPAT, what will you do? Add back depreciation. Why, sir? Non-cash. Correct. Depreciation is a non-cash. Okay. Similarly, we'll add back all amortizations like goodwill written off, this written off, that written off. Okay. So add back depreciation, add back amortizations. Okay, these two are what? Non-cash items. Now you will be stunned. Maybe some it might happen. You will get stunned. I'm adding back interest also. Sorry. Interest is non-cash, not sorry. Interest is cash expenditure. Very correct, my friends. But by doing this, you know what will happen? What this will give me. That is important to understand, friends. What this will give me. Slowly. Tell me what this will give me. That is important to understand. Uh, Non-operating. See, this will give me cash before payment of interest, because I have added back the interest expenditure also. No? See, in the denominator, I'm taking annual installment of loan. Na, guys, in the denominator, what are we taking? We are taking annual installment of loan, which includes the interest amount also. So that's why what I'm taking in the numerator, I'm taking the numerator as this NPAT, add back depreciation, add back amortization, even add back interest. By adding back interest, what it will become? It will become cash before payment of interest. So that will be a correct way to find out how much money I have to pay my interest. If I want to find out how much money I have to pay principal and interest, I should take the cash which is before making the payment of interest. No? Actually, from that only I will pay. No? Correct. No? So see, if I have to make a I have to make a payment of, suppose I have to make a payment of buying this pen. Suppose this pen costs 500 rupees. Okay. And I have no, it costs more, but example 500. It is this pen really cost much. Uh, So suppose I have to buy this pen 500 rupees. Okay. And I'm checking my pocket how much money I have. I have say 500 rupees. I take out this 500, give to the vendor. Vendor gives me back the pen. Money is finished. Now what is left in the pocket? Il lepo. Now what? Now I compare with the money which is already there in my pocket, or after the, so before the event, na, before making the payment, I have to check. Na, before making him a payment, I think 500 is there. Okay, I can pay. After paying 500, nothing left. Now how you will buy? Are you already idiot? You have already bought. So what you have to take? You have to take the cash before making payment of interest. Na. How will you reach that? Add back interest. Are people respond, react? Don't present, don't pretend as if you are dead. Uh, you guys are done writing this. Yes. Rule is same. Higher the better. Na more the merrier. Yeah. Higher the better. Okay. Come on. No. Uh, Sanya is saying, sir, divided by annual installment. Okay. Depreciation to be added back here. JKC might, it must be a printing error. Depreciation has to be added back. He's saying in the material it is subtracted. Obviously, it has to be added back. No, then PAT, add back the depreciation. Done, people. Okay, fine. So now enough of the ratios. Okay, because sir, we are almost done with this place also, sir. So please don't give any more. Even if you have, please don't disclose. Enough. No, but we are done also as such. Okay. If any particular practicality wise ratio comes, no, that will write wherever we are now. Okay. So let's come to questions, guys. Let's come to questions. So we'll come to question number 10, right? That is what is left for us from the classwork section. True, no? Huh? Okay. Fine. Last question, correct. This brings so much happiness to announce. Last question. Yeah. Please come to question number 10. Let's start. Capital structure of beta is as follows. Equity share capital is 8 lakh. Equity share capital of rupees 10 each. So I would say 80,000 shares, right? Right, people? Then 9% preference share capital of rupees 10 each is 3 lakh. And then obviously this total is what? 11 lakh, correct? I see, people, what are now you know that I always discuss all the questions to be discussed in classrooms. In case you have little hopes that I will leave you early, don't even expect that. Ruled out, right? Okay. So additional information, profit. This is profit after tax at 35% is 270. In simple words, I would say NPAT is what, 2 lakh 70,000. Depreciation is also given. Equity dividend is 20%. Yes, 20% of what? 20% of what? Face value, correct? Right? 20% of obviously what? Face value. True, right? That is 10. Yes, no? Yeah. And the market price is given. So MPS is given. MPS has to be given in question. Now, in the middle of the question, we are not going to leave the question and go somewhere to find out the market price. You are required to compute the following. Show the necessary working. Okay. Dividend yield on equity shares. So what is the formula? DPS upon MPS into 100. Cover for preference dividend and see cover for equity dividend. See now here you have to develop your logic. Okay, fine, we'll solve. Earning per share and PE ratio is what we have to calculate. So let's do it. It's very simple questions, very simple question. Solution to classwork question 10. Yes, Daksha, you're right. So let's solve the first one. Dividend yield on equity shares. Dividend per share upon market price per share into 100. You can write over here. Dividend per share would be 20% of 10. What is that 10? face value. Actually, give me the answer also. Right, 5%, correct. So dividend, it's going to be 2 rupees upon. See, MPS has to be given in question, guys. Right? We can't find it out. So this answer is 5%. Okay, let's go with the next one. Cover for preference dividend and cover for equity dividend. So we have, though asked in one common question, you have to find it separately. Okay? When it comes to cover for preference dividend. So apply your logic, though we have written the ratio just now. The logic is very simple. So from which profit do we pay preference dividend? So NPAT. So from NPAT divided by what? Preference dividend. Okay. So in case we don't have preference dividend, we'll calculate over here. So it is good a habit to show the workings over here, side by side. So what is the rate of preference dividend? 9%. 9% of 3 lakh comes to how much? 27,000. Okay. So now let's complete this. NPAT given in the question is 2 lakh 70. Right? And the preference dividend is how much? 27,000. So coverage is how much, guys? 10 times. Yes, I hope everybody has understood this ratio, friends. Hello? The company is playing pretty safe. It's having a 10 times coverage. In the same question, we also have to calculate cover for equity dividend. Now see, we did not do this ratio very specifically, guys. See, listen to me. We haven't done this ratio very specifically. Why? No company would otherwise calculate. Now you've been asked to calculate, so we'll do it. Right? See, understand. Equity dividend is fixed or fluctuating. Fluctuating. Right? Whatever we calculate this year, will it apply next year? No. Like preference dividend we are talking about. The amount of, okay, profits may fluctuate, but the amount of preference dividend will remain same. Correct? Will equity dividend remain same like that? No, sir. How it will remain same? So we generally, that's why I see in the standard list of ratios, we have not written cover for equity dividend. Because no company calculates like that. Okay, fine. We have been asked to calculate. We can apply the same logic over here. Na? We can apply the logic over here. What we would say, so cover for equity dividend you want. No? So you take that profit from which what equity dividend is paid. Then we know equity dividend is paid out of Payesh profits available for equity shareholders and divided by what? Equity dividend. Correct, friends? So first of all, we have to calculate Payesh. NPAT is 270 minus preference dividend of 27,000 will give us Payesh. Right? So 270 minus 27,000 gives me 243. Okay. And I have to just write equity dividend also. Equity dividend is how much percent? 20%. 20% of the face value. So we can say the equity face value total 8 lakhs. No? Correct. 8 lakhs. So it will be 160. So if I think of calculating this, my Payesh is 243, which I will divide by how much? 160. So 243 divided by 160. 1.518. So let's make it 1.52 times. Ah, equity dividend is out of free cash flow. It's just a cover as compared to your profits available for equity shareholders. I'm not saying that you give dividend or something. Ah, let's come to the third one, earning per share. That is what? Profits available for equity shareholders divided by what? Number of equity shares. So, so profit available, we just calculated, no? So don't calculate again and again. In any sum, no, any amount is calculated once. There is no need to show it again. Then number of equity shares are how much? 80,000. 243 divided by 3.0375. So you can say 3.04 no, rupees per share. Yes, okay, you can calculate that way also. Then, okay. Next, what is asked? P ratio, price, earnings, what we had discussed, you remember, na? Ratio of price with that of earning. Price means market price. So MPS upon EPS. Right? MPS has to be given in questions. Yeah, I've already told you. MPS is how much? 40 rupees. And EPS we calculated 3.04. So 40 divided by 3.04. 13.157, right? So 13.16 will do. 13.16 times, guys. Price earning ratio. So many times. Remember that share is costing 40 rupees in the market and you will earn 3.04 from it. So how many times you will have to pay off the earnings? Of the earnings, 13.16 times I will have to pay. Okay. People, you remember this P ratio, P multiple. How many times of earning per share we will have to pay to buy this share? Right? See right now also. 40 rupees is the market price. You buy that share for 40 rupees. That share will earn 3.04 rupees for you. So how many times? 13.16 times of the earning per share you'll have to pay. So that you will buy this share. Okay. Yes, ma'am. So that completes with all of our uh, classwork, right? So we'll be talking about the questions to be discussed in class. Take a 2 minutes break and then we'll continue. Yeah, people. Let's be back. Let's start. People are there. Hi, everyone. Chalo, let's start then. So, as usual, sir, show the solution 2 point. Rashid, what do you want? 2 point solution means what? Second point means of this question only. Huh? The whole solution is there. Why only second point? Take the whole solution. Good. You're done now? Chalo, fine. So, let's move on. Let's go to question number 1 to be discussed in class. Okay. See, what guys, a lot of connectivity is there. So, what you need to do is you need to read it properly and calculate all the values. See, what you've been asked, you're not asked for making any balance sheet or P&L. You're asked for simple, quick ratio. Okay, we'll just write the formula. Like for quick ratio, what it would be? It would be current asset minus stock minus prepaid expense, if at all there are in question, upon what? Current liabilities. Okay. Fixed asset turnover ratio, what is that? Sales upon fixed asset. Proprietary ratio, people. Tell me proprietary ratio. Balance sheet ratio. Seventh one, last one, right now. Yes, yes, yes. I find it always difficult to show this way, that way. I don't understand. So, yes, PT is what we remembered, correct now? PT, proprietary ratio, PT means proprietors funds upon total assets. Earning per share we just now did, no? Ish upon what? Number of equity shares. Okay. Price earning ratio, yes. Price MPS upon earning EPS. Okay. So see what things you need to calculate all this matter. See, it's like that. You need current asset. You're not directly, now you take a look at the things which are given in the question. You are given current ratio, you are given debt equity ratio, you are given returns on total assets. Now see, you remember yesterday we had a discussion on this ratio also, returns on total assets. What I told you, see, it makes sense to compare it with EBIT. Correct? But if the management tells you, no, I don't want to compare it with EBIT, I want you to compare it with after tax profit, then what will you do? You do after tax profit. As I told you, there is no stringent thing. You can compare anything with anything. You're getting my point? Okay. See, miss, if question says nothing, okay, we will go with EBIT upon total assets. Normal, this is a ratio. Normally, this is a ratio. But here, what we will do? But here, we will not take EBIT, we will say NPAT. Why? Because question tells us to take after tax. No? So NPAT upon total assets. Okay, fine. Okay. Total asset turnover ratio, guys. Answer for this is what? Sales upon total assets. GP ratio is GP upon net sales. Stock turnover ratio is what? COGS upon average stock, current market price is the information given. I told you the NPS has to be given in the question. Net working capital is given. See guys, whenever I say net working capital and whenever I say current ratio, I have one feeling. What is that? Yes, I can calculate current assets and current liabilities. No other feelings over here. Fixed assets are readily given. Equity shares are told, preference shares are told, and also you are told opening stock. See guys, so specifically they give opening stock, no? So you know what? You cannot substitute average stock by closing stock. People, do you remember this? People, if opening stock is not available, then what we say? Opening stock is equal to closing stock. That's a normal practice we are doing since estimation of working capital. Right? If nothing is given, then we assume opening is equal to closing. Then average will be closing. But you see in this question, specifically they are giving you opening stock, right, friends? So can you take closing stock? No, you have to go with average stock only. Okay. Fine. So you know what? This is all like using all the ratios. Now you will say, sir, okay, fine, I'll solve quick ratio. But for solving quick ratio, you don't know current assets. You don't know stock, right? Means what? First, you have to use all this data given over here and what? You have to calculate current assets, you have to calculate stock, everything, and then write. Okay. So what to do, guys? Uh, let's let's do one thing. I'll give you what, it's 8 o'clock now. 10 minutes to try in rough, then I will show you the solution. I have yesterday only calculated all the values. Hello? 10 minutes. Try it out. Then I'll show you. Don't post anything in chats. Don't post anything. But try it in rough, guys. Don't try it in your fair book. Huh? Don't try it in your fair book. Try it in rough somewhere at the last pages. Okay. I have the solution with me. I can show you right now also, but I want you to try first. Question I will show. Question I will show. No problem. So you guys, while solving, you'll realize that arranging the things is so crucial, right? When you're solving, no, you keep solving. I'm just telling you, arrange everything properly. Okay? Then you will be able to arrive at the answers. Are, it's okay now. Even if I'm muted, I understood if people are asking for 2 more minutes. I'm giving the 2 more minutes and keep calculating. And it's okay if you don't post your answers. Don't take all that trouble to type over here. Kata, 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 kata. Laksha done? Should I start discussing, guys? You could post me like 2 more minutes. Someshwar is saying 2 more minutes. Many people have replied. People are writing answers also. What happened? Sania done? Jay? Ashreya done? Yes, Mahalakshmi are also done, it seems. Sitting there. Ovia told me long back she is done. What about Vishal? Are you done, beta? Lakshay is done. Shri? Oh, Shri. You done? Not sure about it. Okay. So let's take a quick look at the answers. Okay, let's start taking a look at the answer. Now people ask me, no, sir, do you watch IPL? So yesterday while watching IPL, I saw all of them. The best thing to do. Okay, so see, uh, let's discuss it out, guys. Okay. Yeah. So see, first thing is what I've utilized what the way data is given in the question. Just let me open my question. See, what is told in the question initially? We are told with the current ratio. And as we discussed, that current ratio and working capital, this is an attractive combination, right? So, what is the first thing that we're doing? The first thing that we are doing is we are using what? We are using this working capital, right? We are also using the current ratio. So I hope everybody has reached till the same figures of current liabilities 3 lakh and current assets 7 lakh 50,000, right? Can't we zoom it? You can, I think whatever screen I share, you can zoom from your side, guys. Whatever little I understand, not that good like you people are, but I suppose whatever I show on the screen, if you wish, you can zoom in from your side, है Okay, okay. Then see, debt equity ratio is given 1 is to, debt equity ratio is given, see, hold like this. Yeah. Uh, Whichever device you logged in, people, you can zoom it, right? So, debt equity ratio is given 1 is to 1.5. So, what have I done? Converted it in what? In this form, debt upon equity is 1 divided by what? 1.5. So, first I focused on calculating everything. Then this is our common hint that we use, guys. Sources of funds is equal to what? Application of funds. And by solving this, I got debt of 5 lakh 80. And then I'm writing equity as obviously what? 1.5 times of debt. So I get equity as 870. Take a look into the question, guys. You are given equity capital. You are given preference capital. When you add these two things, okay, equity capital is 6 lakh. Preference capital is how much? 2 lakh. But total equity came to 8 lakh 70,000. Okay. I'll do one thing. I'll change the layout to single page. So those who can't zoom from their side will be able, at least able to see this much. So when you solve this, okay, when you solve this, what happens? You get reserve and surplus as a balancing figure, correct? I'm sure you people have presented like this. Okay. Miscellaneous expenses are obviously nil, nothing is told in the question. That's why. Okay. So I've utilized till now, what have I done? I've utilized net working capital and current ratio. In the order, I have utilized debt equity ratio, right? And then I go to the next ratio. That is what? Returns on total assets 15%, and it is clearly written after tax. That's why I changed the formula a little. Instead of taking EBIT, I say what? I will take NP80. Fine. So NP88 divided by total assets. You solve this, you get NP80 of 2,62,500. What is total assets? That also I have clearly written. Okay, that fixed assets plus investments plus current assets. Guys, fixed assets are given in the question. Take a look. Point number 9. Fixed assets are 10 lakh. Right? Investments are nil. Current assets, sir, we found out just now. Current assets 7 lakh 50,000. We have found out just now. So we get total assets as 17.5 lakh. Substitute over here, you get NP80 as 262,500. Okay. Next, you are given uh, total asset turnover ratio. So I've used that. Next ratio I've used total asset turnover ratio. Sales upon total assets. Out of that, what we know now, friends, just now we calculated total assets. You use those total assets, 17.5 lakh. So you get sales of 35 lakh, right? Okay. After that, you are given GP ratio. So you know GP ratio is 20%, means COGS has to be 80%. Use that, sales 100, COGS GP 20, then COGS has to be 80, correct? And when you solve this, you will get COGS is 28 lakh. Okay. Next, see, calculate everything possible. Next is what? Stock turnover ratio. Okay, fine. How we calculate stock turnover ratio? See, stock turnover ratio is COGS upon average stock. This time we are not going to substitute average stock by closing stock. Why, sir? Because question gives us opening stock separately. So because of this substitution, we get average stock as 4 lakh. But when I have to solve quick ratio, I subtract which stock? I subtract the closing stock from the balance sheet. That's why what we do, we say, okay, but we want closing stock. Okay, fine. So average stock is equal to opening plus closing upon 2. We'll put average stock as 4 lakh. We'll substitute opening stock as 380. Guys, this is the opening stock. Hope you understand. Opening stock is given in the question. I suppose last line is opening stock. Oh yeah, 12th point is opening stock. Okay, once we substitute all this, what do we get? We get closing stock 4,20,000. So I've used till GP ratio and stock turnover ratio. I think you know for usage of all the data, right? So if you take a look at these 2 pages, now I will show both the pages, right? So in this first 2 pages, what we have done, we have used every possible information given in the question. We have used every possible information given in the question and kept our raw material ready for calculation of all the ratios. Correct, friends? Okay. Now, when we start calculating the ratios, let's see, we are going to use the information one by one. Check your answers now. If you calculated the first part correct, obviously everything has to come correct only. Quick ratio. From current assets of 750, we subtract a closing stock of 420. Current liability is 3 lakh. So the ratio is 1.1 is to 1. This is our final answer. For what? Quick ratio. Okay. Then fixed asset turnover ratio, sales upon fixed assets. What we found out? We found out sales 35 lakhs. Fixed assets are given in the question. So you get fixed asset turnover ratio is 3.5 times. People, both these answers are right. I am asking about my calculation. You are right only. My answer is correct now. Thank you. Okay. Yeah. Next one, we have to calculate proprietary ratio. So PT, proprietors funds upon total assets. Yeah. So proprietary ratio, proprietors fund, guys, 8,70,000. We calculated now equity. I'll show you that. See, equity. Now people are, sir, but this is the equity. We want proprietor fund. So for all those people, I remind the short name called Epson. Yes, sir, we have heard Epson. Where, sir? Sir, on few printers it is written. It is a brand of printers. Last time I was not having water, so I brought some water especially for that. Come and jump into this. Come, jump from that side. Chindu Barpani, correct. In the initial stage, I had told you about remembering the sources of funds. E for equity, P for proprietor fund, S for shareholder fund, O for owners funds, N for net worth. These are different names for the proprietors fund, right? Correct. So proprietor fund, you will put 8,70,000. Total assets, see, once we have done the calculation over here, we just now calculated total assets, like 17.5 lakh. Use the same total assets. Don't calculate again and again. Your proprietary ratio comes 49.71%, guys. Okay. Yeah. You round it off to, yes. Round it off to what? 4.08 rupees per share. It's always, yes. Earning per share based upon number of equity shares. Number of equity shares are available in point number 10 in the question. Earning per share, you have to do this basic working in PAT minus preference dividend. How did you get preference dividend? It's given over here, no? 9% preference shares of rupees 10 is 20,000. So preference capital is 2 lakh. 9% of that, 18,000. So you get Payesh upon number of shares, 4.08 rupees per share. And then the last one, price earning ratio. Okay, MPS upon EPS. MPS 16, EPS 4.075. Even if you've done 4.08, answer will come in 3.93 times. Got this? All answers correct? All 5 answers correct? Thank you, friends. Thank you. Hope this is pretty clear to all of you. Right? So what to do? Take screenshot right now. Did small mistakes here, there, but rest was correct. Not done, Jay. We can do it little later after discussing all the sums. The carry forward effect. Someshwar, carry forward effect. What you chose, current market price is 40 rupees. Came from classwork last question, question number 10. Don't do like that, dear. Okay, fine. Let's continue. So let's go to second question. Okay, second question is very simple yet very important. Okay, you know why? Screenshots. At the end is okay, na? After discussing all the questions, we'll do it. Where I'm going to run away, tell me. So let's discuss question number 2. Such a small question, no? Okay. Let's come to question number 2. Shall we? Let's go through it quickly. Assets of Sona Limited. Yeah, let's read it very carefully. Assets of Sona Limited consist of what? It consists of fixed assets and current assets. So it's making very clear. Balance sheet asset side, you will have fixed assets and current assets. Okay. This statement is not damn crucial statement, guys. See, while its current liabilities comprise means have something. Okay. Have what? Bank credit in the ratio of 2:1. This statement is so confusing. When it says comprise of something, guys, listen to me, listen to me. When it says comprise of something, and that too in the ratio of 2:1, there should be two things, no? Hello? People, you're getting me? What am I saying? How is the statement going? See, it said is comprise of bank credit in the ratio of 2:1. The statement is little bit unclear. When there is a ratio of 2:1, when something is 2, then something has to be 1. So how the ratio, how this statement should have been actually? It should have been something like this. Current liabilities comprise of bank credit and other current liabilities in ratio of 1 to 1. Then this would have made a sense. What they have skipped? They have skipped these words and other current liability. You understand? Comprise of bank credit in the ratio of 2:1. So what we need to understand, the bank credit. Bank credit means bank overdraft. Okay, let me write that also. Bank credit is equal to what? Bank overdraft. Okay, people, you're getting this. This is not a mistake. Don't take it as a mistake. This is the way of writing. It comprises bank credit in the ratio of 2:1. Means what? Bank credit is two part. Bank overdraft is two part. Now, if bank overdraft is two part, what has to be the other things? We will say other current liabilities. So purposely, what they have done, they have not disclosed this part, that other current liabilities. But then we need to understand that we need to get the meaning that way. So have you all understood this? Okay, thanks. We go ahead. We continue reading. Yeah? Okay. So I hope now you are pretty clear. Okay, that bank overdraft has two part. Other current liabilities are one. Okay, fine. You're required to prepare the balance sheet of the company as on 31st March 2020 with the help of the following information. Share capital is given. One amount is given ready-made. Working capital is 1,50,000. For all those guys, those who don't know, working capital is CA minus CL. Okay, they are very helpful in nature. They're telling that in case you've forgotten. Gross margin means only what? GP ratio, guys. Gross profit ratio is given. Inventory turnover means what? Stock turnover. Average collection period is given 1.5 months, right, people? Then we are also given current ratio, we're given quick ratio. Okay, this is again a surprise package. We normally don't have such kind of ratios, people. Normally we don't have such kind of ratios. So why this must be given? Reserves and surplus to bank and cash 4 times. You understand why this must be given? This is given to find these two numbers, to find reserve and surplus and to find bank and cash, right? Assume what? 60 days in a year, wherever you need actually, okay, wherever you need, but then you know that it is already in the form of what? Months. So we can always solve just like that only. Okay? So no need to convert it into days. In case it is required, we will do, but otherwise, this won't play any big role for us. Okay. Then people, so upfront it appears to be a very simple question. Tell me now here before I go to the solution, because solution I've written everything, you will be like dancing with joy. So if I say what this balance sheet will comprise of, so I'll say shareholders funds, which will comprise of share capital, reserves and surplus. Then current liabilities, there will be bank OOD, right, and other. Here we will have fixed asset for sure. Current asset, what things I'm going to have? See, I'm given stock turnover ratio, means stock is definitely there, right? I'm given average collection period, means debtors are definitely there. And I'm also going to have bank and cash. You understood now why bank and cash? Because it is written in the ratio. So this is going to be the skeleton of my answer. Okay. Uh, it's a big trick in this question. What say, guys? Should you be given this to try for 10 minutes? Because see, I have a see whatever efforts I have to take for solving that I have already done. The answer is with me. Okay. So if I show you the big bomb in this question, there'll be no fun. Right? You have to experience it. Right? So I strongly recommend that you take 10 minutes. I've shown you the skeleton also. It's like, okay, sir, this is what we have to find out. Okay. So give it a try, guys. Give it a try. Try to do it as early as possible, Hariharan. You won't need 15 minutes, trust me. Within 5 minutes, you'll be done with this. Please do it in rough, guys. Hello, hello, hello. Please do it in rough. Please don't do it in fair place, because I'm very much sure everybody of you is going to make a mistake in this. Yeah, yeah. Where I'm changing the screen. There's a big glitch in this summer. Just that it appears normal. As we'll proceed further, we come to know that something is going wrong somewhere. No, no, Mahalakshmi. Closing stock is not nil here. How closing stock can be nil? Wait. I told you, no, you don't need 15 minutes for this sum. Very soon you'll realize that we are landing into a mess. 2 minutes, yeah. Cook your Maggie, please. Ah, 5 minutes game over. Give up. Okay. What's the problem? Bank code and bank can be always there, no? It's okay. No? See, every person having a bank account, that doesn't mean that he doesn't take a loan or what. I have some investments also and I have some bank loan also. That's okay. People are like, oh, there should be net value. Somewhere they learn from this. Net should be there. Why net should be there? I have some investments made also. At the same time, I have taken some loans also. That's okay. Stuck somewhere. Okay. So current asset total is mind-boggling. Yeah, now you're on point. So should I discuss with you guys? I think okay, bank cash is negative. Oh wow, wonderful. Last 2 minutes, huh, guys. After every 2 minutes, you're then 2 minutes. 2 minutes, 2 minutes. Not done. Bank credit is bank overdraft, there, nothing else. Uh, Sakit, wait for a moment, please. So, you know the feeling is that same feeling when in the childhood, hey, you're hardly in first standard, second standard, and in the middle of the crowd, no, your parents, you by mistake you leave the hands of your parents, no, you feel like that when after solving so many questions, sir, confident that we are able to solve, and now like we're feeling like stuck up. Actually, you're not. I'm showing you the path. Okay, I'm making you think on all the lines. No. You're not bowled out. Not at all. नहीं ऐसा नहीं है विशाल, nothing like that. See, we become stereotype. We want to go with the. We want it like this. That okay, sir. Show us 4 5 ways, but every question should be solved within that 4 5 ways only. You know what? Till date, ah, correct, Shrija. I agree with you. You're going to repeat that now. Trust me. I think you should stop racking your brains and you should listen to me now. Okay, it will eventually the brain will explode. Okay, unable to tally the things. Ah, so I think we should do the working and you will soon understand the moment I show you the solution, you'll soon understand what was the only simple thing that none of you have tried till now. Okay, then you will realize the whole question is about one simple trick. Okay? No more 5 minutes. Let's get into it. Wait, stop. I know that you all are making mistake, and I also know where you all are making mistakes. So let me come to the point, please. Let me come to the point. Guys, pay attention. See, stop your guessworks. Wait. Yeah. Let's talk about question number 2. Okay. Let's first talk about this part. Let's see the solution little later. First, talk about what you have done. See, most of you will agree that yes, sir, we have done like this. Okay. We started like this. Working capital 150, current ratio is this. So sir, we got current liability as 3 lakh and we got current assets as 450. Okay, then what is the next thing, sir? We took quick ratio. We were confident that we will substitute like this. Okay, so what you all have done in the process, stock is definitely a non-quick asset. But then we discussed, no, that most of the time what we will do, we'll subtract bank OD, taking it as a non-quick liability, right? Tell me, students, all of you proceeded in this way only. All of you proceeded in this way only by taking bank OD as a non-quick liability, right? Now, now see, yes, exactly the same. Perfect. Yes, I know. Okay, you know how have I written? I've written as if a student will write. Okay, what you would do. Okay, fine. So you went on. Okay, we got it. You got stock 370. Excited, yeah, correct answer. Okay. Use stock turnover ratio. Substituted average stock by closing stock. Got COGS. Then Saket got this answer. Yes, sir, I know this. Saket, I got this answer. Same what you had posted me, 24,666,667. Correct. Okay. Then I, sir, used the average collection period. I got debtors also, sir. But then here is where I'm getting stuck up, sir. Correct. Someshwar, you also posted me the same thing, sir. Cash balance coming negative. Absolutely, sir. Your story and my story is the same, sir. Ah, and Nikhil has got his answer. You know how he got his answer? By mistake. By mistake, you know what he did? He forgot. He forgot to subtract bank OD. And by mistake, Nikhil has gone correct. Because he answered me the correct answer, but I just did not discuss about it. Yes, Sanskar also. Okay. I did not answer because I wanted you to experiment that. So you know what? You are used to this. No, sir. Every time what? Sir, you told no subtract. What guys? What? So it is sometimes to be subtracted. So in this question, cash bank cannot be negative. So the most important part, guys, our assumption that bank OD is a non-quick liability is wrong. It doesn't match. So we take the bank OD as a quick liability. So from where the change will come? See, the change will come from here. You will have to calculate again from here. Okay. Obviously, while calculating now, you'll be little quick. Okay, go quickly. So now you are taking bank OD as what? A quick liability. So no need to subtract bank OD. I'm not subtracting bank OD. So I'm getting my stock as 2,10,000. Sorry. Yeah, stock is 2,10,000. I use this stock 2,10,000 in my stock turnover ratio. I get cost of goods sold as 10,50,000. I use this in GP ratio. I get sales as how much? 14 lakh. Correct, people? Okay. Then I use DTR. Then I get debtors as 175. And then now see everything is fitting into the picture. I'm getting cash bank as 65,000. And then I'm doing reserves and surplus to bank and cash. Then I'm getting reserves and surplus as how much? 2,60,000. Right? And with this, now the balance sheet will fit perfectly. Okay. See, this is what is expected to happen. I was knowing. Somebody has to post this doubt. That's why we have to do the sum twice. Tell me, have I not, guys? Tell me, have I not solved as you have solved? And that's why I gave it first to you to solve. And I was sure that 99.99 people out of 100 would do the same thing. Okay, what was a convincing way? I would have told you. See, question one you solved now. Let me solve question two. So I start. No, happy note I start. Okay, let me solve question. Then I see people in all questions now. We have see this is the way I will convince you. See, and we'll be happy going home. Okay. See people in all questions we have taken bank code as a non-quick liability subtracted. No, let's do one thing. Let's take it quick liability. Let's not subtract. By putting this dialogue, question would have got solved in next 5 minutes. but then you are not exposed to a possibility that would happen in the exam. It is good to get stuck in my class rather than getting stuck in the exam. So if you feel that burden, oh my God, you have to solve 2 times. But now you know the trick. Means this can also happen with us, no? Correct, na, Shrija? Leaving hand once in the controlled environment is good, na? Rather than you really getting lost. Correct, na? So, see, understand. If you feel the burden that, I have to solve it 2 times, then more important. So, if this question comes, it will waste our time. It's okay, you don't solve. You have an option of not solving. Tell me, but what you would have done in the exam if this would have come? Tell me, honestly. You would have done this like this only. So is it not important to know this part? Is it not important that this way you can go wrong? There is no other way. How would you find that it's a quick liability? You have to substitute in the ratio and check whether it is fitting or not. See, all the earlier questions that we have solved, it was actually a non-quick liability. So everywhere we subtracted it and everything properly fitted into the solution. So there was no problem. All the earlier questions we solved, what we did, we assumed it to be non-quick liability. We went on solving and everything was matching. So our assumption was correct. Huh? So this time, it's a shocker to all of us. Okay, also this can happen. So next time onwards, you should be aware of this fact. Okay, fine. Our assumption may go wrong. It's an assumption, guys. There are only two possibilities. Either it can be a quick liability or it can be a non-quick liability. There cannot be a third thing to happen. There you go. Taking it with quick liability, still you don't match, then you should conclude, sorry, I'm not able to solve, leaving the question. So, see, I feel that this showing this was very important. I feel that, see, you understand that if I had given you direct answer, let's assume that it's a, because I know now, I know. It's like I have to divert my livestock now. Like this side. Okay, this is what non-quick liability. So everybody comes in. Hey, quick liability. This side. Everybody comes that side. Had I not shown you this part, you would have always gone home today comfortably. Ah, good, good. Sir told us, let's assume quick liability. It got solved. This would not have even struck you. But what if I assumed it non-quick and what if it doesn't tally? Right? So that's why I've purposely shown you this side. See, just showing you with quick. See, what if I made you assume? Chalo, students, let's assume today it's a quick liability. What would have happened? You would have happily concluded the question in 5 minutes. But you should be knowing that even this can happen. That's why we have solved like this. Am I clear to this? You should be knowing everything. That is important because in exam, I'm not going to. You cannot. You cannot contact me in the exam. You cannot send me a personal chat like you keep sending over here. What to do, sir? What to do? What to do? What to do? You can't do that over here. You can do it here, but not in exam. So you should be aware. Okay. Yeah. So I'm doing virtually handholding during the exam also. Yeah. Let's go to the next question to be discussed in class. Question number 3. Question number 3 is comparatively very easy question. Okay. Means what you have to do is you just have to pick up the numbers and calculate the ratios. Okay, so we'll just do some quick marking over here. See, shareholder fund we all understand. Oh, sorry, sources of funds we all understand. What is that? That is shareholder fund plus what? Loan funds. Loan funds in means what? Means debt. Okay, so this plus this. Okay, let me put a line over here. So guys, this is debt plus equity, no? So if I have to name this line, what can I call it? sir, we are taking sources of funds, so we will get sources of funds, correct. But we need to understand that yes, it is sources of funds. Also, we call it capital employed. Correct, people, you remember this? Sources of funds means only what? Debt plus equity. That is what? Capital employed. Okay. Then what? Application of funds. Now see, guys, again, in application of funds, the headings are so. This is how they write, guys, so that you will remain confused. See, fixed asset they are writing. Fine. So yes, sir. First, fixed assets given. But after that, you are not told anything about the next part. So see, cash, bank, debtor, stock, and other current assets. Okay, this is what this all is a current asset, right? So we can say cash, bank, debtors, stock, and other current assets. This is all. This is all what? This is all current assets, guys. Okay, just draw lines because now that other current asset has gone on the next line, but then the number is not been adjusted. So cash bank amount, debtors. If you are in your physical copy, hard copy, draw these straight lines keeping a scale on your book. Okay, so okay, listen. This is other current asset, guys. It's a printing error. Other current asset has gone down, but that so you understand now there is no space left. Yeah. So now what? See, understand the total of current assets is not done. So if I say total of current assets, it would be 3466 plus 489 plus 1495 plus 2867 plus 1567. Total is 9884. I'm just showing for 1 year. Then that because that line alignment is disturbed enough, current liabilities are this, guys. Current liabilities are this. So from this 9884 of total, you subtract this 3937, then you will get that 5947 of what? That 5947 is your final answer. Okay. Yeah, I have added, sorry, 1 minute. I have added fixed asset also. Let me correct that. Let me correct. But that is how they have done it. That is how they have done it. They have not. You should be taking only this as your current assets. Got it, friends? Yeah. So what has been done? Everything has been taken up together and added. Okay. Now, if you take like that, it would become 489 plus 1495 plus 2867 plus 1567. 6418. Right? This is 6418 minus 3937. Give you 2481, right? In this 2481, don't forget to add the fixed assets of 3466, and then you will get your final answer. So this amount, guys, 5947, what is that? That is application of funds. Got it, friends? That is application of funds. So please make the relevant changes in your solution, guys, please. I mean to say, in the question, you do the proper markings. Please do the proper markings. Then, here also, nothing big deal, just that you should do proper markings. Sales minus cost of goods sold is what? Gross profit, right? So you need to know that this is subtracted. It's also subtracted, correct? Okay. Then what? Selling, general, administrative expenses. So these are the expenses, guys. Check. These are the expenses. Getting me? Right? So after subtracting this, you know what? See, I told you now, reading the question becomes so important. After subtracting this, what will you get? You'll get earning before interest and tax, EBIT. Now again a line is missed. So interest expenses are over here. They are subtracted. Interest expenses are subtracted. Okay. So now you have a total to come over here, which is going to be a profit before tax. This is tax. So this is profit after tax. Okay, just make sure that you do correct reading. Alignment is disturbed in balance sheet also. Yes, dear, that's what I'm telling. Okay, so I don't want you to interpret something wrong just because of the wrong alignment. Yeah, financial leverage is another name for debt equity ratio. Okay, so I hope you do the correct alignment. It means you solve with the correct alignment. Done, people. Okay, so we have to calculate certain ratios. So keep this part with you. Means keep the question in front of you. I'm showing you the solution. We will do the screenshot at the end after we discuss all the three. Yeah, see, go with it. Hmm? Check the values. Check the values. Let me open the question, please. Yeah. Uh, what we have been asked to calculate? First one, inventory turnover ratio. That is stock turnover ratio. Okay, 20 and 19. COGS upon average stock. We have changed the average stock to closing stock. Again, some people are going to pounce on this. For 2020, you can do average. I know. For 2020, I can do average. Okay. Yes, correct. Correct, correct. Same thing we did in question number 9, right? For the sake of maintaining our comparison. See, 2019's opening closing stock is given. 2019's opening stock is given, guys. No, not given. Because 2019's opening stock is not given, we cannot calculate average in 2019. So we will not do average in 2020 also. So just quickly check the number. See, everything is ready made. Cost of goods sold I have copied 20860 12544 upon what closing stock. So take to the line of stock 28672407. Right? I get some answer. Financial leverage is debt equity ratio, that is debt upon equity. It's such a simple question otherwise, debt total is 3570 and 3083. Equity total is 23771470. Okay. Then the next ratio what we've been asked to calculate is what? Returns on capital employed. EBIT upon capital employed. Such sweet people see. EBIT is also given ready-made to all of us right now. So copy that EBIT. 170 and 586. Capital employed means only application of funds or sources of funds. So 5947 and 4555. I hope you're able to get that line. Then returns on equity, Payesh upon equity shareholder fund. See guys, in the capital, we all know that there is no preferential capital. So the last line of income statement, profit after tax, the last line of income statement, profit after tax, that itself will be our Payesh. Correct. So what I have done in Payesh, I have taken 334 last line of income statement. I'm saying and 289 as my price. Equity shareholder fund is same as shareholder fund because preference shareholders aren't there, right? I hope people you remember this. What I've been always saying when I use the word shareholders funds. When I use the word shareholders funds, I see how many components? Four components: equity share capital, preference share capital, reserves and surplus, miscellaneous expenses. True? Yeah. But when I say equity shareholder fund, it is only about how many components? Three components. Who's kicked out? Preference capital is kicked out. Correct, friends? Right? Here, any explicit information about preference capital is given? No, not given, sir. What does it mean? Preference capital is nil, sir. And if it is nil, then we all know that equity shareholder fund and shareholder fund are one and the same, right? So that's why the shareholder fund that is given over here 2377 and 1472 are substituted directly as what? Equity shareholder fund. Okay. So average collection period, you know, na guys, I'm a little conservative about this. I never calculate average collection period directly. I first calculate DTR and then I do average collection period. Remember, guys, we had a discussion about this also. Can we directly go for average collection period? Who stops us? We will have to do inverse of DTR, correct? So if we are good at understanding that much maths, if we are confident that we will not mess in the examination, yeah, average debtors plus average bill receivable upon credit sales into 12, do it. I don't mind. But yes, but if you're not confident, you're like going to go in the exam, ask for a coin and do toss. What in the numerator, sir? Credit sale or average debtor? Well, a toss. If that is the scenario, then please better remember one ratio, debtors turnover ratio. Credit sales upon average debtors plus average bill receivable, and then you calculate that, and then you say, okay, ACP is 12 by DTR, right? This is your own comfort level. I always recommend that you go this way, right? And some students are confident, no, sir, we will not make any mess, don't worry. Absolutely fine. Both ways, you all know answer is it's the same thing. There's only one extra step added. It's not that you have to write 10 pages to get this. Just one extra step is added. Okay? Fine. So everything is done. So see the comments. Inventory turnover has improved, right? Dependence on okay, you see debt equity ratio. You see earlier it is this is the opening, this is the closing, right? Earlier it is 2.09 is to 1. Now it is 1.5 is to 1. What does that mean? Earlier debt used to be 2.09 times of equity. Now it is 1.5 times of equity. Okay? So we have written it that way. Dependence on debt has reduced. Yeah. Then see if you check out returns on capital employed fallen down because of the increase in the operating cost. If you check operating cost and interest, both have increased. Similarly, returns on equity has declined, okay, from 1.96% to 1.43%. Average collection period has also slightly reduced. Okay, so guys, today I have given you in writing all the notes, right? So more explanation, okay, for 2.6%. Actually, 1 minute, huh? I think 1 minute, 1 minute. Returns on equity, 1 minute, guys. 89 divided by 4. Yeah, this is 19.63. Yeah, this is 19.63%. Okay, so let me change over here also. Okay, so there's a see all these part I have explained in today's notes also, which I gave you for question number 9, right? So you can copy few things from there. Okay, that it shows profitability has declined. Okay, a small note is given at the end stating what stock turnover ratio has been calculated using what closing stock. Since average stock cannot be calculated for the year 2019, right, friends? So otherwise, it's a very simple question. So now I will do it in the double page mode, and then you take a screenshot of all this. Yeah, yeah, Rishabh, yes, I'm reading you. And scroll up. Hate Ray people. People want to go to money control. Wait, first complete this. Yes, no man. Done. Next page. On. Yes, Rishi. Let's be productive. Arey, but let people take the screenshot now. What is that? In the name of productivity, you're making me rush. Done. Yeah, last page. Obviously, who else will write? Shweta. Done, friends. Okay. See, handwriting is so different. Arey, no, same. It's me only. If you take a closer look, you'll realize it's me. Writing on the paper and writing on the screen makes a difference, obviously. Still, the tone of writing is same. I don't see any big difference. Where is it? It's the same thing. Me only. You need to give it to now a handwriting analyzer. Same thing. I just normally when I show you the writing part, it's like this. So now you see the same. Okay, people. Obviously, that's not possible now with a no notebook. How many colors I will use? That's a limitation. Okay. Fine, friends. So we are left with 15 minutes. So the session is as such over, right? Listen, guys. Listen, everyone. Money control. We will talk about. We are done with that. See, homework section. Yesterday also somebody had also asked. I forgot. Kritika had asked. I don't know whether she's here or not. Uh, See, understand that in your timetable is a link available for homework. Please, guys, right? You click their link, now that timetable PDF. It is very clearly written link for the homework, right? You click that link, that will open. If it is directly not opening in your PDF reader, copy that link and post it in Google directly and click, it will open. Are you getting my point? Yeah. Okay. Try those homework questions gradually. Fine. Okay. Now, yes. See, uh, how these ratios are practically used. That's what I was talking, nothing else. Okay. So, means should not feel that, sir, where these ratios are used. Okay. So, the ratios are definitely used. Okay. Yes, answers are there on the link. Answers are there on the link. Before I tell you, I have definitely checked it. Priya, 1 minute. So many people sending me the link. A textbook link I don't want. Homework solution link. Link given in Telegram group also. So you be aware of all that. Huh? Come on, people. Quickly, I will just show you a few things. Give me a moment. Okay. Uh, why so surprised? Why is the screen? What happens? See, this is about few details, okay, of money control. This is all about. This is not slight. Hmm, it is not showing it properly. Actually, that's a problem. See, this is MRF technicals, okay, and then obviously below that is the. It's not coming correctly, actually speaking. So I'll not able to share the data actually. So I was little surprised that why is it happening? It's not coming properly on the screen when I try to share it. Doesn't give me the option to zoom in, zoom out. That is a problem. That is my problem. See, if you go over here now, you will find all the details. Like, I'll do one thing. Leave it. I'll take some ideas to be recruited. Give some ideas to be recruited in Big Four. I'm unable to do that. When I open, I'll find it out what's wrong. I'll do one thing. I'll take the screenshot of the necessary things and share with you. Share with you in the next lecture. Discuss directly from that. Else, what you can do? You can download Money Control app in your mobile. Okay, keep that ready. The main purpose is to show you how the ratios are actually calculated. Okay, so tomorrow also, website is enough, but somehow it is not working on. I'll find it out what has gone wrong. Because my Zoom controls and everything is overlapping. So what you do is you just keep the website downloaded with you. I mean to say the application downloaded with you. I'll show you. See, what is important is that you should see that these ratios, how they are actually calculated. So you feel like, okay, whatever we are doing is something realistic. Okay. Okay. So let's stop for the day, right? Then we'll continue in the next lecture. Tomorrow we have the lecture, right? Okay. So see you guys tomorrow. Any doubt? Bye bye. Any doubt? Any questions? Solution. Abhishek, what is that? Solution. Array, I missed it. Some people need a question number 2. Okay. This is not working. I'll leave it. Find it out later. Ganesh, I presume the solution of question 2 to be discussed in class. Yeah, I moved from Zodo to Drawboard. Zodo is giving, recently it is giving some glitches. It hangs in between a lot. Then, summary chart, I will make it dear. Karina, I'll make it. I'll show it to you. It is good if you can do it on your own, but I'll try to club everything on one page and show it to you so that it becomes very easy. iPad, very poor fellow man. iPad and all that I don't buy. uh, Come. So, anything else you people want? Anybody? Something missing? questions to be discussed with your markings. Okay. It Mahesh. To be discussed in classroom. I'll show one question. Or like you take a full photo, that will be easy for you also. Yeah. Going to the next term. You go to the next page, Mahesh. That's it. Huh? Covered. No, all the questions are covered. Huh? This is what. This is done. Okay, fine. Done, huh? Okay. Then chalo, let's log out. Enjoy your break. Have a great day. Meet tomorrow. Next lecture. Bye bye. Bye. Yes. Bye bye. Bye bye. God bless you all. Enjoy your day.